Hello everybody, welcome back to another episode of The Lunch Hour, brought to you by Collab, where we eat, sleep, and breathe finance, news, and everything in between. So if you like finance, news, or crypto, make sure to subscribe. So, I'm laughing right now simply because I was under the impression that I was live, and I obviously wasn't. So, the show was supposed to start at 12:30. I'm actually starting at 1 because I went through the entire show and realized that I wasn't actually streaming. So here I am. We're going to start all over again, or I'm going to start all over again. And but with that being said, let's dive into the news, guys. So like always, we are going to start by looking at the overall crypto market. Right now, we are sitting at $2.38 trillion. The overall volume is 118 billion. Bitcoin dominance is sitting at 40.7%, while Ethereum remains at 21.6%. The overall market is up 4.14%. Bitcoin currently sitting at 51,000, up 4.16%. It is still down 11.11 for the 7-day period. Ethereum is sitting at 4,323, up 3.5%. But as we keep, pretty much everything is green for the 24-hour period, but most assets are down for the 7-day period still. It's been a rough 7 days for the crypto assets. Terra Luna, though, however, has been going on a tear, up 19%. So has Polygon Matic, up almost 30% for the 7-day period. The cryptocurrency market has gone, into extreme fear. Yesterday, we were sitting at 16 out of 100, but today with the moves that Bitcoin has been making, we have gained 9 points. We are sitting at 29. We are probably going to go higher when it updates in 6 hours. So it's a game of patience. People have been asking me the past few days whether they should sell or not. I'm not the type of person to sell at the bottom. And if the cryptocurrency or the Fear and Greed Index is sitting at 25. I'm not selling at 25. I'm not selling at 10. I'm not selling at 16. For me to sell, Fear and Greed has to be sitting between 85 and 95. I don't like to sell bottoms. I'm not the type of person to do that. I'll write it down to 0. That's how I roll when it comes to this stuff. There's a lot of assets that, I'd rather hold them to the bear market than to sell at a loss. That's just how I function. That's how I've always been, and that's how I'm going to continue to be. But with that being said, let's dive into the actual news. The Bitcoin dip that shook the market, and what lies ahead as Bitcoin crosses 50,000. So I want to start the article right here. Tricky price movement. For most of November, Bitcoin made lower lows as its price fell by almost 27% from the all-time high of 69,000. Bitcoin's November trajectory highlighted how after each dip, a smaller price uptick, or rather a consolidation, was noted, which was then followed by a bigger dip. Yeah, we went on a drastic move through all of October, and then obviously, November we went down. A lot of people were talking about November and Moonvember, whatever they wanted to call it, and obviously the opposite happened. Since people were expecting an up November or an up October, November drove higher, and then it was more of a, buy the rumor, sell the news kind of event. Bitcoin price dipped by almost 13% starting 16 November, and then close to 9% since 22 November. It was followed by a major flash crash of November 3rd, pulling the price down below 50,000 level. This price trajectory makes the recent 6% gain at the time of writing questionable as to whether this recovery would indeed be a breakout or yet another fake out. And we don't know. Nobody knows. I'm not the type of person, I'm not huge on technical analysis when it comes to the cryptocurrency market because emotions are amplified. Fear is amplified 10x, greed is amplified 10x when it comes to this cryptocurrency market. And yes, I look at it and I try to spot trends and where the market is going. But at the end of the day, when it comes to like price targets and, levels of support or levels of resistance, it's very hard to do it when it comes to the cryptocurrency market. And again, I listen to other YouTubers, those that are more into technical analysis, and I try to do like my own technical analysis. But it's very hard to do it when it comes to cryptocurrency markets, especially since we are in unregulated territory and it's more prone to market manipulation than the traditional market. It is very hard to stick with technical analysis and determine where the market is going. But right now, we're literally, we don't know where we're going. We could go up, we could go down. If you look at the short and long buying pressures, they're pretty much sitting at 50 even. I think the longs have a little more what should I call it? People are trying to go long more than short, but we just don't know. And in this territory, I tell a lot of people, just be patient, hold, don't make any hasty decisions, don't buy into the panic. Just step away from the computer, walk away, take a walk, and then reassess if you need to reassess. Right now, I'm looking at 40K. If Bitcoin goes below that, then I'm starting to, maybe we're going into a bear market. But at the end of the day, I look at Bitcoin, and I said it multiple times in multiple shows. That's my canary in the coal mine. I don't own Bitcoin, but I still look at it every single day. That's probably the very first asset that I look at in the morning. Simply because, I'm expecting that if Bitcoin goes down, we're going to go into the alt seasons. I own a lot of alts. My portfolio is pretty much alt, comprised of altcoins. So I'm waiting for my alt season, and then if Bitcoin continues to go down, then I'm like, okay, you know what? We're going into a bear market. It's time to step away, take my profits, and walk away for at least 2-3 months when it comes to cryptocurrencies. But that's my mentality. That's what I recommend people to do. But let's continue. Let's continue on. Bitcoin price aims for 52K as stocks rebound fuels bullish return, and the stock market is looking good right now. It's looking very good. If you look at the Dow Jones is up 500 points, 1.5%. The Nasdaq is up 475 points. The Nasdaq, for those that don't know, is comprised of pretty much tech stocks, and when riskier technology stocks go up, the crypto market tends to follow it. And then the S&P 500 is up almost 100 points, 2%, 2.1% for the day. So that's actually good for crypto. But let's see. Bitcoin, BTC attempted to crack 51.6 resistance through December 7th as BTC USD gained in line with an equity rebound. Data from Cointelegraph, Markets Pro, and TradingView showed the largest cryptocurrency markets repeated assault on the 51.6 mark on December 7th. At the time of writing, the latest charge was ongoing as the Wall Street Open added further bullish momentum towards 52,000. Bitcoin was up almost 6% overnight. Bitcoin rejecting at 51.6, that's an important level, just like 53.5 through 55.5 is. Cointelegraph contributor Michael Van Pope commented, the trend is still up since the crash, through which 49.6 is an area that I like to see hold if we want to retest 53.5 to 55.5. I mean, we're obviously above 59.6, so it's just, a matter of time. And like I said, if we break to 53, then I'm definitely, putting my bullish hat on and saying that we're going higher and we might retest the 69 level. But right now, I'm uncertain. I don't know whether we're going up or down. I'm just watching the markets just like everybody else. And only time will tell. And I recommend people to do the same and be patient. But when I see things like this, I get butterflies in my stomach and telling me that we're going higher. Third biggest Bitcoin whales holdings total $6 billion after a whopping 2,700 BTC buy-in. Bitcoin returning to 50,000 overnight inspired one of the largest wallets to buy an equivalent of $137 million more. Blockchain data from on-chain monitoring resources BitInfoCharts highlights how one entity bought the dip like no other. Long story short, they bought 2,700 more Bitcoins. That wallet holds 118,017 bitcoins, and the average price is 21,160. So now, when I see whales buy Bitcoin like that, that just tells me that we're going higher. There's just no other way to put it. Institutions are buying, whales are buying. I'm just small time retail investors, and when smart money buys in, I consider this to be smart money. Those people that have information that we don't know, they talk to other bigger wallets that control the market, and that tells me that we're going higher. That there's just no other way to sugarcoat it. 21 shares Bitcoin and Ethereum ETNs on Nasdaq Stockholm. The Swiss-based investment product issuer 21 shares listed its first two physically backed exchange-traded notes on Nasdaq Stockholm. The underlying assets of the financial product are respectively Bitcoin and Ethereum. First issuer of ETNs on Nasdaq Stockholm. According to a recent press release, Nasdaq released a new segment of ETNs, a type of debt securities that track specific assets and trade on a major exchange like a stock. Exchange-traded notes are similar to bonds but do not have periodic interest payments. 21 Shares, a Swiss organization that enables people to invest in various cryptocurrencies through conventional ETPs, became the first issuer of physically backed crypto ETNs on Nasdaq Stockholm, with Bitcoin and Ethereum as underlying assets. As of November 2021, 21 Shares managed nearly $3 billion in 20 European cryptocurrency exchange-traded products and 82 listings. The CEO, Henny Rashwan, commented on the most recent initiative. We are excited to become the first issuer of a physically backed ETN for Nasdaq Stockholm, one of the most tech-forward global exchanges. Our partnership is a strong endorsement of 21 Shares' missions to make crypto more accessible in a simple and regulated manner. I mean, that's awesome. There's not much to say about that. That just makes Bitcoin and Ethereum more accessible to investors. And then Celsius lost 54 million Bitcoin by using a MetaMask for customer funds. I talked about this last week, I believe, about the hack, but them using a MetaMask to manage people's funds, that's new news. So let's cover it. On-chain data suggests Celsius Network lost 54 million worth of Bitcoin during the last week's hack on high-yield protocol Badger Dow, which saw $115 million worth of digital assets taken. Hackers extracted 896 RAT BTC from a MetaMask wallet. The Celsius employee was interacting with Badger Dow website. Industry insiders were quickly to question why it used MetaMask to handle client funds. I asked the same question. Other Twitter users had questions about the hack too. Seems to be very costly way to generate yield in hindsight, said one Celsius customer. Who will be absorbing the losses, Celsius or the users? And that's a great question. Bitmart went through another hack, and they said that, they were trying to negotiate with the hackers, try to see if they can come to a resolution. We're yet to hear, what's going to end up happening. But at the end of the day, Bitmart said that they were going to use their own money to cover the losses, and customers' funds were going to be safe, and customers didn't have to worry about it. That's great. I think that using cold storage, especially institutions like this managing large sums of money, cold storage is very important, and having an insurance company to ensure that your security is to industry standard, and that the funds are secure, that's very important. Having third parties check your securities and your custody, and how you custody your assets is very important, especially in this industry, where hacks can happen overnight. Another customer reacted to the sentiment with sarcasm. Their business model is great. They let their users take all the risk, and if something goes wrong, well, not our fault. Celsius has admitted to the loss during the hack, but has not specified the amount or how the funds will be recovered. Celsius is simultaneously dealing with several other issues, cease and desist orders from multiple state security regulators, the recent arrest of their chief financial officer, failing to disclose its CFO arrest to investors before a $750 million funding round, and users reportedly having difficulty withdrawing funds and concerns of Ponzi-like securities or Ponzi-like qualities. And that's one thing that I will say. I used to have a Celsius account, I want to say year and a half, 2 years ago, and they were offering 20-25% returns for me just holding my money on their account. And I'm the type of person, I'm very skeptical. And when I see that something is too good to be true, I start questioning it. And at the end of the day, they just gave me, kind of weird vibes. And I ended up, closing my account like 2 weeks later. They do have a token, though, the Celsius token. And in the past, year, it's gone through astronomical moves. It went from July 13th, July 2020, from 40 cents all the way as high as, I think, $8. I think I saw it at like $8.20. So, yeah, that's insane. And I'm just saying, if you have an account with Celsius, tread carefully. There's just a lot of questions surfacing, and I don't want you guys to lose your money. So be very careful. Next on Fidelity Digital Assets, expand institutional lending services. Nexo, a globally regulated crypto collateralized credit provider, has announced a partnership with Fidelity Digital Assets, an execution and custody services provider, to establish a platform to provide institutional access to digital assets with custodial and lending services, according to a news release shared with Forecast News. The partnership will allow Nexo to establish an institutional-grade platform for the storage of digital assets, add a custody layer to its security infrastructure, and develop lending services to institutional investors. It will also allow the firm to expand its portfolio of assets under management. As part of Fidelity Investment, one of the world's largest and diversified financial services, with $4.2 trillion in asset under management, Fidelity Digital Assets provides dedicated blockchain expertise to institutional investors. Along with Nexo, we recognize the opportunity to deliver a more robust and seamless experience for investors through collaborations like this, said Christopher Tyre, head of Fidelity Digital Assets Europe, in a statement. We've seen tremendous growth of interest in digital assets from institutions within the European market, and we're committed to implement sophisticated solutions to match those available with traditional asset classes. And that is something that, is taking place in the cryptocurrency industry. Companies are facilitating the access to cryptocurrencies for institutions. Ripple's doing that with their liquidity hub. Coinbase is doing that. Fidelity is doing that. Nexo. So there's definitely a large market when it comes to this. And at the end of the day, institutions want to get into cryptocurrencies. There's no sugarcoating it. I mean, they see that there's money to be made and they want a slice of it. But moving on, Gemini partners with major Colombian bank, Bancolombia. New York-based cryptocurrency exchange Gemini just announced its partnership with Colombia's largest bank, Bancolombia, under the country's regulatory sandbox. According to the announcement, Gemini has completed all necessary steps to move into the implementation phase. The strategic collaboration will offer people in Colombia a new option to buy their preferred digital currencies under the Bancolombia account. In other words, users of Bancolombia can directly link their account with their Gemini account and use it to conveniently purchase crypto as easily as purchasing any other product. This partnership is of immense importance for the development of the local crypto industry, as Bancolombia is the largest bank in the country, with total assets reaching $275.76 billion in 2020 and more than 16 million users in the same year. The estimated period of the project is 1 year, starting on December 14th, that is next Tuesday. During that time, all eligible users will be able to buy Bitcoin, Ether, Litecoin, and Bitcoin Cash from Gemini using their Bancolombia accounts. Really not much to say there, but that is awesome when it comes to adoption and, facilitating people in Colombia, their access to cryptocurrencies. And I honestly see next year banks in the US doing the same thing, where people are able to buy cryptocurrencies directly from their bank accounts. In other news, I've been talking about this for a while now, for about 2 weeks. Indian withheld citizens for using cryptocurrency as payment tools. There were rumors around. Currently, the Indian parliament is in session. And the past 2 weeks, there have been rumors that they've been working on more comprehensive crypto regulations. Apparently, that is not the case. They're pretty much putting their foot down in India and pretty much saying no to crypto. Previously proposed legalization and further cryptocurrency regulation in India will include strict punishment for those who choose not to obey the new law, arrest without a warrant, and jail time with no right to bail. The Indian government has previously stated loud and clear that the government is looking forward to banning most cryptocurrencies that are being used as payment tools, which universally means a total crackdown on crypto as a payment method in the country. The previously accepted bill will generally prohibit all activities related to mining, generating, holding, and trading crypto assets. Crypto would not be allowed to be used as a store of value, exchangeable medium, or even a unit of account. Any non-compliance with the above-mentioned rules would be considered a strict violation of the law that would lead to arrest without a warrant or further notice. Arrested individuals will not have the right to be bailed out of prison. The government's actions contradict the previous statements about plans for the promotion and further development of blockchain industry and technology. In addition to a complete prohibition on crypto usage, the non-fungible token markets will also take a blow and more likely stop functioning in the country, lawyers say. After the release of the government plans, the majority of large Indian traders and investors had to exit all crypto-related markets at a significant loss due to risk of being arrested. And again, that is insane. I'm surprised that not more people are talking about this. I haven't heard about this on any other crypto channel. So it's a huge 180 from, the information that was being put out. And it's very unfortunate. I thought that they were going to pass more comprehensive laws when it came to cryptos, but obviously that is not the case. And then this is something, that I mentioned earlier. The Dow extends its rebound, jumping 500 points as investors reassess Omicron risk. So let's see right now. Yeah, the Dow's still up 504 points. The Nasdaq still ticking up, 476 right now. And then the S&P 500 is sitting at 96, almost 100 points. It seems to be that Omicron is not going to be as bad as people expected it to. Stock jumped for a second day, continuing the rebound from a recent rough patch as investors grew less fearful of the potential economic impact from the new Omicron variant. The market certainly, and this morning is another indication, is kind of looking past the Omicron variant as something that is going to slow down the economic activity. But we're still not going out of the pandemic. David Solomon, Goldman Sachs chairman and CEO, told CNBC. British drug maker GlaxoSmithKline said the new data shows its monoclonal antibodies treatment is effective in treating the variant. So yeah, like I said, this is good news when it comes to the cryptocurrency market and the stock market overall. I appreciate that. Mr. Jentaski. Yeah, so the overall, the fears over the Omicron variant might not be as blown out as people were thinking. And one thing that we need to look at is the biggest thing that's bringing uncertainty to the overall market is the Fed. The Fed is supposed to meet next week, and there's a lot of people, a lot of investors, a lot of economic analysts saying that they might increase or reduce their tapering. So money printing might slow down. There's a lot of fear when it comes to inflation. Jerome Powell, the Fed chair, was sitting with the financial committee on Congress last week, and he was saying, and a lot of senators were saying that you know, inflation was getting out of control and the Fed needed to do something about it. So definitely the money printing might come to an end. I've thought about this a lot, and I don't see this happening, at least not as fast as people think. Back in 2019, the Fed was saying that they were going to slow down their quantitative easing, and literally the stock market just went into complete panic. And I think it literally almost entered bear market territory. It dropped 20%, 20% in a matter of days. So it's just like, you know, feeding a cow, and then the cow wants to keep eating. And that's what the Fed has been doing for the past year and a half with the stock market. And if they try to cut the food, the cow is not going to be happy, and it's going to throw a tantrum. And that could exacerbate, you know, more financial chaos. And definitely the Biden administration and the Fed, they don't want that. So I honestly don't think that this is going to happen as fast as people think. So, but with that being said, that is all we have for the show today. I do want to bring this up really quick. We are giving away this NFT. So it's one of 999. One was recently burnt. So all you have to do is subscribe to the YouTube channel. So join, and you know, we'll let you know how you can win it. So like I said, we are giving it away. All you have to do is subscribe to the channel. But like always, thank you for tuning in, guys. We really appreciate all the views, all the new subscribers we've been getting. Like, share this video. We are trying to get this information out to as many people as possible. And with that being said, we'll catch you guys on the next one.